Hey everyone, let's not waste any time and start the video. Today, we're diving into a powerful 7-fund ETF portfolio plan to maximize your returns over the next decade. Let's break it down. First up, we have VEE and XEQT, each making up 25% of our portfolio. VEE gives us exposure to emerging markets, and XEQT provides a diversified mix of global equities focusing on North America. VEE has a management fee of 0.23%, a dividend yield of 2.45%, and includes 4,400 stocks with top holdings like Tencent, Samsung, and Alibaba. XEQT has a management fee of 0.18%, a dividend yield of 1.83%, and includes over 9,000 stocks with top holdings like Apple, Microsoft, and Amazon. Next, we have IVV and VGT, each at 15%. IVV tracks the S&P 500, giving us access to the top 500 companies in the US. VGT focuses on the tech sector, capturing the growth potential of technology giants. IVV has a management fee of 0.03%, a dividend yield of 1.26%, and includes 500 stocks with top holdings like Apple, Microsoft, and Amazon. VGT has a management fee of 0.10%, a dividend yield of 0.62%, and includes 425 stocks with top holdings like Apple, Microsoft, and NVIDIA. For a touch of stability and innovation, we allocate 10% to VHT, which targets the healthcare sector. And for a bit of the future, 5% goes to ETCC, a crypto ETF, adding a speculative edge. VHT has a management fee of 0.10%, a dividend yield of 1.36%, and includes 422 stocks with top holdings like United Health Group, Johnson & Johnson, and Pfizer. ETCC has a management fee of 0.75% and holds Bitcoin and Ethereum. Finally, 5% is dedicated to ICLN, an ETF focused on clean energy, tapping into the growing demand for sustainable solutions. ICLN has a management fee of 0.41%, a dividend yield of 1.63%, and includes 133 stocks with top holdings like Enphase Energy, Solar Edge Technologies, and First Solar. Why is this a wise investment? Diversification. This portfolio spreads risk across various sectors and regions, balancing growth and stability. Another key strategy here is dollar cost averaging. By investing a fixed amount regularly, you buy more shares when prices are low and fewer when prices are high, reducing the impact of market volatility over time. Buying more of the fund when it dips can strengthen your position in the long run. You might wonder why Europe, England, Germany, and Japan have less weight. These regions often face slower growth compared to emerging markets and the US. By focusing on emerging markets like those in VEE and innovative sectors like clean energy and crypto, we aim for higher growth potential. On average, this portfolio offers a dividend yield of approximately 1.69%. This is calculated based on the weighted average of each ETF's dividend yield. By choosing this 7-fund portfolio, we're likely investing in around 15,000 stocks. Remember, this is my 10-year investment plan and not financial advice. It's crucial to have some cash on hand to jump into the market when it's down and to maintain an emergency fund for unexpected expenses. Also, review and rebalance your portfolio 3 to 4 times a year to ensure it stays aligned with your investment goals. So there you have it, a well-rounded, future-focused ETF portfolio for the next 10 years. Don't forget to like, subscribe, and hit the bell for more investment tips. Till next video, happy investing.